Welcome to MarketTamer.com. We've got a chart up here of the S&P 500, but the purpose of this video today is not necessarily to discuss and evaluate the trend itself as much as to talk about the overall performance and relative performance of industry-renowned traders and investors. So if we take a look at the overall performance, we know it well. Market has had a very substantial decline. We've seen the most recent bottom in the market was somewhere here around early March. But what's most interesting is how people view their own performance relative to this benchmark. One thing that retail traders should be very, very alert to is the so-called marketing of many firms, which states that they have actually outperformed the market. And what I mean by that is, let's say the market dropped all the way down to 700. Let's just take an easy number from 1,000 down to 700. So it's down about 30%. And many individuals will come along and in their marketing state that they actually outperform the market. Why? Because maybe their portfolios only dropped from, say, 1,000 to 800 on an equivalent basis. So in fact, they dropped 20%. And this is something I'm pointing out because it was actually mentioned on CNBC recently by Warren Buffett, who I certainly have the utmost respect for, as most of us do, for his history of successes and profitability in the market and investing decisions. But none of us are immune to cognitive dissonance. We all fall into the trap of at times saying, well, the market did badly, but I did slightly better even though I did horribly. And certainly that seems to be the case with Buffett right now. He certainly did not do well. And he's come out, he's admitted it was not a good year. But on a relative basis, he's argued, well, it could have been worse. Sure, it could. But that's not an excuse when you're going out there and determining who you should invest your money with, if you so choose. And because we tend to favor controlling your own money, we strongly believe that nobody will care about your money more than you will. We certainly advocate that everybody learns the lessons needed to achieve trading mastery. So as you're evaluating different services, it certainly is very possible that you don't have the time necessary to commit to learning material, or you simply don't have the inclination. In your research, we would strongly advocate that you look beyond the front page marketing. So if somebody states that they beat the market, that doesn't mean anything. That just means that maybe they did slightly better than a really, really poor market. But it doesn't mean they did well. What you want to do is find people who have actually succeeded in the market, who have read the trends and who have profited from it. So we strongly encourage you to go ahead and do your due diligence, not just with firms that you might be considering placing your money with, but obviously if you are trading your own money, the most important thing you can possibly do is your own due diligence. And the definition and composition of due diligence is obviously a pretty involved, and certainly that's what we focus on at MarketTamer. So if you'd like to know a little bit more about what you need to be doing to take care of your money, feel free to come on over to MarketTamer.com and we'll be delighted to help you. And in the meantime, please be very cautious about investing your money with others. Make absolutely certain you ask all the right questions and try not to fall victim to any lines or sales pitches which involve cognitive dissonance on the part of those selling. Take good care. We'll chat soon. Look forward to seeing you at MarketTamer.com.